Reminder everyone, tomorrow we've got a free webinar at 5 p.m. Eastern going over the details of what our courses entail and talking about the sale of them, 40% off. Join us for info. Day of 2023, and I'll tell you how it had to do with bearish trading, obviously, as we've got significant weakness in the markets today, temporary tops being set. We knew from the video yesterday we're scouting daily consolidation. We know it's inevitable and highlighting some of the names that were likely going to pull back more significantly because they are more volatile. They did not build supports on the way up, and we'll get to that in just a bit, and I'll talk about a little bit of trade review. But the S&P 500, hourly rising wedge, I was talking about this pre-market live streaming with the chart guys, and that certainly played out. And more importantly than that, it was bears confirming short-term trends. We had the S&P 500 confirm the 5-minute downtrend. From that point forward, it was all bears. And so I ended up, well, wish I had the post saying, you're going to have to take my word for it. So one of the trades that I took today was shorting QQQ, and I posted in the chat room as I was doing it. It was this 5-minute lower high right here. And again, my mindset is, was I expecting this kind of drop today? Absolutely not. I was positioning myself in a low risk, high reward scenario. I know daily consolidation is inevitable. If this is our temporary top, then this will be very high reward. As soon as this 5-minute lower high was set, I watched QQQ defend the low of the day 3 times, and it held it a 4th time. So my mindset is, if we break that level, bears are going to be proving to us the first morning control that we've seen in over a week. So I watched very closely, and as soon as that 5-minute lower high was set, that's then my stop. And so I entered SQQQ, and I entered a position in my IRA, because my IRA is long only right now, and I know daily consolidation is coming, and I don't want to just sit through that consolidation and watch my IRA value drop. So I grabbed a position and ended up down here taking 25% of that position off to then get even, because it was a little bit larger than my long exposure. Once I take 25% off, it's now even. And so I now have a position to offset my long exposure. So what I can do with that is just hold it and keep a break even stop. And if the bulls recover and we see continuation, then great. I stop out and my longs continue to cover, or I should say my longs continue to go up, or I just look to take profit. Haven't decided what I'm going to do yet. We're going to take it one day at a time. So what's key from here is we have not confirmed hourly downtrends yet on the S&P 500. The NASDAQ had a weak bounce that did end up being a little hourly bear flag, but I have to see the S&P 500 confirm the hourly downtrend tomorrow, because if it doesn't, it's going to be what we saw multiple times already. Just straight bear action on shorter term timeframes, no trends confirmed, and a lack of follow through to set a daily high or low. I do think the bears are going to be able to confirm an hourly downtrend, but again, just reminding myself, we do still have to see that. We know that we're going to be scouting hourly lower highs to be the result of the next bounces that we see in a ton of individual names and ETFs that have space for those hourly lower highs. So we are potentially setting a weekly lower high here. If we drop back down and break this weekly higher low, it will be a failed 2-week inverse head and shoulders, and it will be just like last time. And we would then be looking back to the fear low. That's on the table as a possibility. Again, I'm still open to both directions here, which is why I was able to take advantage of the bears today. But it was a big win for the bears. We took out 4 or 5 days of bull action with this notable drop. QQQ didn't pull back quite as much. Would have been better off choosing the S&P 500 as a short than QQQ. My mindset was QQQ leading the way up. Going to watch for it to lead the way down, but not the case. But again, watching EMA 12 support. SPY daily EMA 12 we're right at that level. So as I talked about yesterday, this is a level that the bulls need to hold if they're going to keep this daily consolidation healthy. SPY has a gap at 390.65 to be keeping an eye on. And QQQ has a tiny gap down here at 272.94. But again, that EMA 12, watching very closely. So bears have to confirm an hourly downtrend, and then eventually they're going to have to confirm a daily downtrend if we're going to be back in full bear control mode. On Twitter yesterday, I talked about, we know the dollar is going to see a monthly high or low. It's just a question of when. And so we have to be looking ahead and saying, what are stocks going to do? What are metals going to do if the monthly high or low forms and we bounce? I don't think it's forming right now. We don't have anywhere near enough information to say that it is. But if it is, and we bounce to a monthly lower high, which will be the most likely scenario, again, that bounce can take place for multiple months. So we have to be aware of that as well. But right now, bounce today for the dollar, but still in a 4-hour downtrend. It's a megaphone here. Rough drawing, but you get the idea. So keeping an eye on the megaphone, but bulls have to confirm the 4-hour uptrend to follow through with this bounce attempt. Tesla, gap up, second gap up in a row into profit taking. Anticipated that even if the market stayed strong today, we were going to see some Tesla profit taking on this gap up. And then, of course, once the market rolls over, Tesla drops notably with it. I did long Tesla down at the bottom and got a little bit lucky. And I say lucky just because this trade that I'm about to describe, if you ask me what's the probability you think this trade is going to play out, 10%. 10% chance that I'm going to be right with this trade. So why would I take that trade? Because the risk and reward was favorable. My risk was a small amount, 30 cents initially, and I quickly got break even risk free. And the reward is multiple dollars. So if I'm risking 30 cents and the reward is potentially $2, then obviously that's a favorable trade. Maybe a little more than 10% chance. Let's go 15 to 18% chance. But it was just recognizing a lot of bid support. A lot of shares were being filled around 127. I just recognized that and said, all right, I know that Tesla is looking for an hourly bounce, as is the broader market. And so I made an entry. I very quickly sold half, 127.16 I'm in. I'm out half, 23 cents higher. What's the point of that trade? It's hardly any gain whatsoever. At that point in time, I can set my stop under 127 risk-free. And I missed stopping out by 2 pennies. And then at the end of the day, I exited 128.70s because this looked like a rising wedge to me. As soon as we got this bull break with a lack of follow-through, I sold on this pullback. We ended up confirming this rising wedge with a little bit of a pullback, but just a little trade, playing counter momentum after trading with momentum the majority of the day. Bigger picture for Tesla, we know a weekly lower high is the most likely result of this bounce, but anything above 115.60 is a daily high or low. Same thing for Tesla. The bears must confirm an hourly downtrend if they're going to prove to us that the bears are taking back over. NVDA still has not started daily consolidation. So holding on better than many other names. Looking at SMH. Did confirm the hourly downtrend while NVDA did not. You can see SMH rejecting just under weekly resistance. Again, so these names can still consolidate in a healthy manner and hold EMA 12. It's not game over for the bulls. I still need a lot of proving for the bears. As I mentioned, hourly downtrend confirmed tomorrow is one thing that I need from the bears, and then I need a daily downtrend to be confirmed. But I'm open to that possibility because of what our other major sectors are doing. There are red flags out there. XLF just broke the low of Friday. And so what does that mean? That means XLF is shaping up a weekly lower high here. This was our lead bull major sector over the last month, and it's failing at resistance. So maybe we see a weekly higher low in a tightening range. It's possible that things slow down considerably. We got earnings, big tech earnings. I mean, earnings is going to dictate a lot here in terms of who's going to win this battle. But XLF, clear bear break today and on the verge of starting weekly consolidation. Again, another name with a ton of space for an hourly lower high to be the result of the next bounce. Healthcare, back to consolidation lows. This is following through now a bit more with the weekly bear flag, and the monthly consolidation continues. So again, it's our stronger major sectors of XLF and XLV giving us some red flags. We also had all major sectors hit the low of the day at the same time today. When's the last time that happened? Again, that's got to flash in your brain as a signal to be aware of. Because as soon as that happens, as a trader, you should think, I don't want to be looking long right now. I know there's going to be bounces along the way, but if that's my mindset and I stick bearish, again, how many examples do we have when that happens where if you're looking bearish on bounces, that it's much better than trying to play bounces long? It's just a good signal. And I've only been using it the last year and a half, maybe 2 years, but it's one of the most important things that I have added to my tool belt in the last couple of years as just a really great guide. It does not happen without notable bear control, and we usually get significant follow through. Obviously not always. IWM talked about the top fish for aggressive bears yesterday, and we pulled back right under that level, failed to break it by less than 0.5%. Daily consolidation clearly underway. So now we're watching EMA 12. Is this a weekly lower high? It's really just a continued equilibrium. Just viewing this as a high, low, lower high, higher low, maybe another lower high. And this is what I'm talking about. Depending on earnings, could get boring end of January, start of February if these weekly charts just tighten up. But that would be nice for clarity for the end of Q1 for when these tightening ranges break. It's only one day for the bears, but it was a notable day, and we're watching for signs of follow through. Biotech sector started the morning very strong, but obviously unable to withstand the weakness in the broader market. So further daily consolidation underway. Still fairly range bound here as well. Yes, we broke one of our major ranges, but look at the 2-week time frame. It's possible we tighten up. MARA, so this is where we were looking bearish. Bearish reversal doji from yesterday confirmed. And so MARA didn't have shorts available on, well, it did on the morning, and then we ran out of shorts. But I was trading these very often today. So yesterday we came close to rolling over, but we didn't. And so today I was watching for the same thing. MARA, I was talking about it often on the live stream. It was just so clearly bearish, correlated to both Bitcoin and QQQ. MARA was our lead crypto bull on the way up. And so it was glaring in the first 30 minutes today. The first hour, it was just so much weaker. Just clearly, just minute after minute, I'm just watching it show me relative weakness compared to QQQ and Bitcoin. And so I short it at 8:30. And here was another example. We double topped at the high of the day. Riot saw a clear new high of the day. I believe QQQ saw a clear new high of the day there. And we double topped. So on that rejection, I entered short at 8:35. Hitting the new low of the day was a great sign. And then just look at this absolute collapse. We dropped way faster and harder than I was anticipating, down 19% from the high of the day. So I was scaling out. I take partial off on the initial bear break and then scaled some more out. I was out too early. I was out the last of my positions in the 740s here. I sold my shorts too early. I played a bounce. I sold my bounce too early as well. I was all out the bounce in the 720s to 730. I left 4% of shorts on the table and 4% of longs on the table, but it was still the best day of the year. And the point there is when things are extremely volatile, you just need to meet in the middle of the move. You don't have to be nailing the tops and the bottoms. In hindsight, playing this stair step was the way to go. Stair step broke bear at 746. That would have given me a couple extra percent. And the 5-minute stair step broke bull for the first time after this leg down at 702. That would have gotten me an extra 3%, 4%. So there's definitely lessons to take away from it. But again, still big gains in both directions. And then I shorted Riot on that bounce for the lower high. It was struggling at $6. Didn't get a whole lot of follow through there, but again, a couple percent. So just trading it well in both directions, leaving money on the table, but locking in those gains. And I'm going to continue playing these names. We're going to be watching for hourly oversold conditions to be looking for a bounce on MARA and Riot. We almost got there at the end of the day. But again, volatility galore in these names. We're going to be scouting a daily higher low in MARA and Riot. And we're going to be scouting an hourly lower high as a result of the next bounce. So plenty to be looking for in both directions. And we saw the psychedelic names. I talked about MNMD yesterday. Huge pullback from the high. We had the Reddit names, AMC, gap up, finding its top, GME, same thing. So it's just a question of how much bear follow through do we get from here. Gold failing the daily bull flag. EMA 12 support still on the daily. But silver bears keeping me in this trade. Double top at the high. Need to see a break of 23.11 for the original trade thesis of weekly consolidation to be shaping up. Miners opened higher, just an hourly lower high on that bounce. Further daily consolidation. Miners showed us notable weakness yesterday. Metals following today. Oil, bull break into weekly uptrend, but no follow through, so we're watching for daily consolidation here as well. Stair step pattern the last 8 days. Plenty of space for the higher low, but obviously a bull break with zero follow through is a red flag. Bears will have to show us more red flags with a significant retracement here. Again, same thing, EMA 12. You hold that EMA 12, there's no red flags. You lose it, and that's a red flag. Natural gas still weak. I attempted a bounce trade this morning on my futures account, which again is still very small as I'm playing around with it, and ended up exiting break even. And it was playing this morning bounce right here. So I saw this drop into this bounce, and I entered, the numbers aren't going to make sense, but I entered a bit above this bounce, and I set my stop under the low just as a bottom fishing play. And then I did stop out, break even. I moved my stop because my mindset was, if we can't break these 15-minute lower highs and we head back down to the low of the day, then I'm going to be wrong, because essentially I needed that to be the low of the day and bulls to prove follow through. So for me, the falling wedge is off the table because this is bears following through. The falling wedge has to see a lack of follow through, and if my bounce had worked out, that would have been the case. But stopping out, break even, and back to very patient because I have no edge on natural gas anymore. Again, the 12-hour EMA 12. Another rejection yesterday is just keeping the bears in complete control. And that is that. So hope you had a good day out there. Hourly downtrend needs to be confirmed on a lot of names tomorrow. I mean, you look at Amazon. Amazon's a bad example. You look at Apple. Straight drop from the high of the day, no hourly bounce. Must confirm the downtrend for bears to take back over. So hourly downtrends on watch. Daily retracement size will then be on watch. And if we were to see another couple red days, that would be very notable. Scouting hourly lower highs tomorrow. And scouting hourly oversold backburners as well on the names that have been the strongest. So I am watching MARA, hourly oversold bounce. All right, feel free to ask any questions. Appreciate you watching. Got a webinar tomorrow. I'll talk about it at the start of the video. Do good things. Auto border into Utah. This is a picture of some fire ants accepting my peanut bribe. I've been feeding bugs my whole life. I used to feed spiders in my windowsill cold cut turkey or ham, and they would eat it. And I've been feeding ants. We feed them sugar. Fun to just watch. I just watch bugs. Anyways, these are bones from dinosaurs just along hiking trails. So this is a spine. This is Dinosaur National Monument in Utah, and they have street names like Brontosaurus Way. There's a big femur or something like that sticking out of a rock. Pretty crazy that you can just see these dinosaur bones. There's my first selfie of the trip with my new friend. That's some more petroglyphs just on rock on the side of the road. And pretty cool to, try and interpret what they were suggesting. Who knows? But common themes of spirals and coming off of arms. Not sure. Anyways, it's just one of these spots that's on BLM public land where there's your dirt road, there's your scenery, and there's a whole rock wall, and that's just an art studio for ancient man thousands of years ago. You can see the little drawings right there on the left, some of them. And then there's just a spot you could just camp by a lake right over there. So a nice little adventure. There is nothing developed aside from a parking spot near the lake. There's no signs, there's no people, and it's great. So I was just walking around looking at all the different art. That's where I set up my tent, and I got woken up by a moose the next morning walking through this river here, and the moose ended up just sitting on the side of the river for a good part of the day. And I spent my afternoon on this piece of land there. It's mushy sand, and I would just run as fast as I could from one side and then just slide on my bare feet and go 12 feet. It was just like a mud pit. I had a lot of fun, and there was a rafting crew that floated by while I was acting a fool. And a storm came out of absolutely nowhere, just right over the hill, and these big bursts of wind, and this tent ended up in that water. So I was not prepared in terms of I had not staked it down yet. And again, there was no wind on the day, and it was just like all of a sudden really dark clouds, winds going nuts, and I jumped in my car to, avoid the rain, and had forgotten to stake that bad boy down. So didn't get soaked, didn't sink, but definitely made its way to the water. More shots of the river from the other side. And that is Utah. So didn't expect to see a moose in Utah, but did. So we're going to go over to Canyonlands Arches National Park and getting towards the second half, towards the end of the journey at this point. So I appreciate you watching. Have a great weekend. Check out the USMJ video. Check out the SPY market video. Do some good things. Have a party. Make a friend. Pet a dog.